everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly webinar, mapping out your week ahead. And for new people, especially special welcome to you. And just want to explain the title and the meaning of it. What we're trying to do here is actually create the plan for the week. So, as traders like to say, you plan the trade and then you trade the plan. Of course, there's no guarantee of results, but definitely in life, not just in trading. In life in general, if we do spend a little bit of time of planning and creating structure for our future actions, sometimes it creates better results. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade, and I've been involved with trading for over 24 years. I started as a prop trader in New York City in June of 2000, and since then, trading has been my passion. So I did prop trading for about 11 years, and after that, I moved into a different way of trading. Also started to mentor and educate others, and I'm very happy I had this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar: we'll speak about indices, stocks, commodities, forex. We'll try to speak a little bit about big picture. We'll bring some details on specific companies. Sometimes I'm able to bring some nice slides with topics and articles. We also look into economic calendar for important events for the week and try to put it all together with technicals. Risk warning: what we do here, it's purely educational. You can find the full statement at avatrade.com website. It's important here, you have social media channels. We're working constantly on adding new materials, and especially on YouTube. It's my favorite. You can find tutorials, educational materials, and the webinars. If you missed the webinar, it's being posted on YouTube, so you can look back and watch the webinars whenever you like at your convenient time. Also, you have Telegram, you have X. Please subscribe on YouTube. Click on that bell so you'll be notified. And if you are watching this on YouTube, please don't forget to put likes, only if you like it, of course. And also feel free to share it with your friends and write your comments. So let's start. As we spoke, I think last session was session before. As we know, since November 5th, the elections, it looks like Trump was a substitute for Santa Claus. We had a nice rally in the market starting on November 6th. And towards the end of the year, we actually sold the last few days of the year. So the title here, this is from marketwatch.com, says, "Forget Santa, stock market bulls. Look to January barometer for clues on 2025." Of course, everybody's waiting for the January 20th when President Trump will take the office and assume his responsibilities as President of the United States. And everybody wants to see how he will start implementing his policies and changes. Apple, interesting article here. It says Apple offers rare iPhone discounts in China as foreign smartphone sales drop. Okay, of course, one of the incentives you can do is improve the price or lower the price. So trying selling more products doesn't always work, but I guess we'll find out how things will work for Apple. We'll take a look at the chart of Apple, how things reflect there. Tesla, this week, Tesla has been busy after reporting a lower amount of cars sold. The stock sold actually dropped. Let's just read it together. It's interesting statistics here. So Tesla, disappointing delivery results show how hard it is getting to sell electric vehicles, and explain why shares had dropped more than 20% since peaking in December. The stock, however, roared back on Friday, helped by big price target boost from Wall Street analysts. Tesla reported fourth quarter deliveries on Thursday, posting a respectable 495,570 vehicles sold. The number was a quarterly record, but still fell short of Wall Street estimates by some 10,000 units. Investors weren't pleased. The stock dropped 6.1% on Thursday and closed at 379.28, leaving it down 21% from the record close of 479.86 in December, meeting the 20% threshold of bear market. Okay, it did trigger that bear market according to them here, but then Friday, I guess, with some target being set by the analysts, the stock bounce. I think Friday Tesla was up. I don't need to think. It says right here, 8.22% on Friday. So it didn't just recover the 6.1 drop. It actually went higher. So that's Tesla. As we know, since Trump victory at the election, Elon Musk is involved was involved in elections for sure, and he actually has this unofficial position as consultant to the government. I don't know exactly what he's going to be doing, but we'll find out soon enough. Now, this is from CME Tools. You can just Google it, CME Tools, and they keep track here on upcoming interest rates and probabilities. So as of now, there's a 10.7%, no change from last week, I think, a probability of the cut, and 89, of course, the rest of it is no cut. So as we know, since recently the market reacted actually to the last comments of Powell, and it looked like they decreased possible 4 cuts into possible 2 cuts this year already, right, to 2025. And I guess we'll find out. Also this week we have FOMC meeting minutes. They'll be discussing their thoughts from last meeting. Excuse me. Economic calendar. Here, this is public information. I just want to explain it to new people. You can find it on our web trader or the app, or you can just Google it. What I do here, I take out high impact events. As you can see, impact, it's all in red. The most important events, there's so much more, and you should be looking at what actually relevant to your trading. And the times here that I choose is GMT. So these are the events that are waiting for us for the upcoming week. Again, this is public information. It's being posted from a lot of sources. And if you never knew about it, it's important that you get an idea what economic calendar is. And I mean, there are different approaches. Some people like to trade the events. Some people actually prefer to stay away. Some wait till things settle and then they enter the trade. It's totally up to you. But I think every trader should know about these major events. Not all of them, but especially these high impact events. The reason they are being marked by high impact, they're really impacting the markets. So during the certain events, you could see increased volatility and some spikes in the market. So you just want to know that those things are coming up. Okay, Monday, we have PMI numbers from China, PMI numbers from Germany, consumer price or CPI index from Switzerland, also CPI from European Union, PMI numbers from US. Wednesday, here we go, CPI numbers from Australia, retail sales Germany, ADP employment change. This is another agency. It comes 2 days before the NFP. When we get there, I'll explain what it is. So they'll report how many jobs added, and FOMC minutes, as I mentioned, they're coming out on Wednesday, and definitely market reacts to it because that the whole idea, the whole outcome of this event is what's next. Everybody wants to know, and that's what market is, right? Selling the future, pretty much. Thursday, retail sales from Australia, trade balance Australia, retail sales from European Union, and Friday is the culmination of the week with the very important news. So we have CPI numbers from China, we have employment data from Canada. Most of the time they report together, and we have NFPs, which is the most important number, I would say, of the month. Usually it's the first Friday of the year. This time they pushed it to the second because I guess the holidays and everything else. So we have, of course, NFPs, we have employment data, unemployment data, and also we have a Michigan Consumer Sentiment Index. So these are the events for the week, important to keep in mind. 10-year yields, as you know, I like to show it because it affects certain markets. As you know, this move up started and it triggered the strength of US dollar. It put a little bit pressure on gold, and normally would also push the markets lower. But in this case, we did have a mixed market. Market went up with it as well, and the last few days of the year, we were selling, and then we started January strong. So these are this is the 10-year yields. So far, they're holding very strong, and we'll see. We'll continue watching them. So as of here, we saw the strength of a dollar again, a little bit of weakness of gold, but then it tried to recover. Now, these are the losers and the champions for the week. So let's just go through them really quick. In commodity world, we have cocoa, again, being a champion, up 14.25%. Crude oil was up almost 5%. Gasoline, 4.37. On the losing side, we have wheat down 3.29 for the week, cotton 1.64, copper down 1.1. That's the commodities. In Forex, we had the dollar Swiss up 0.69%. On the losing side, pound yen was down 1.5%. Pound dollar down 1.3, and euro dollar 1.8. And of course, the Bitcoin was up 3.74% for the week. So these are the winners and the losers for the week. Okay, now let's move to the charts, and we'll start with indices. Then we'll go take a look at some specific shares, and then commodities, and then Forex. So let's start with indices, and as a tradition, we're starting with China. As we know here, again, I'll explain in a few seconds to new people that haven't followed Chinese market. So China was in trouble, is still in trouble, I think. The whole idea of shutting down during pandemic, which it looks like everybody forget about, China is still feeling that pressure because they were very strict on their policies. They had the zero policy, so if anything came up, they shut down the full factories and businesses and everything else. So here, sometimes the end of September, they started to implement some measures to revive the economy. Reaction was very strong. We had a strong move within 2 weeks to the upside, and it took only 2 days to erase half of it. So this was the reaction to that move up. Since then, we've been zigzagging up and down. We had few attempts with new kind of measures that the government tried to bring to life, and they were very short-lived. Where the move to the upside was reset the very next day. They had another one right here. So at the double tap on this attempt to move higher, and as a result, we are trading lower, and we're actually trading lower below that initial reaction. So we actually give away more than 50% from that move currently. So with China, as you know, we usually bring 4 instruments. That's copper, crude oil, Australian, and New Zealand dollar. As China is being using a lot of oil, of course, copper, and Australia and New Zealand dollars, they're being called commodity currencies, as they do a lot of export to China. So let's take a quick look. We start with oil. Oil didn't really go with that Chinese move to the downside. We saw recent move of oil to the upside, and as you could see here, we are at the 200 moving average, and we try to really fight or decide which way we go from here. This was a strong move, 1, 2, 3, 4, 5, 6, 7 sessions to the upside. Copper did go down with China, and Friday actually bounced with the market, so it showed a little bit of strength here. And Australian and New Zealand dollar, they've been super weak. Most of it, of course, is due to the US dollar being strong, but also China low demand, I guess, is affecting it as well. And of course, the local economy. So that's China. Japanese index here, we did try to move higher, breaking the previous resistance here. We failed. We sold the very next day, and now we're really trading at the bottom of this candle. So the bottom of this candle, which is 39,270, should be something to watch. And of course, the top of it could be another attempt to the breakout. Now, US indices, as we said, at the end of the year was pretty rough. We started the sell-off. Where did we start it? Right before Christmas, the 24th of December was a sell-off. And usually, as that article mentioned, the Santa Claus rally would take it up, but we did have a nice run to the upside since the elections. Let's see, trying to bring that November starting on that move. I'll bring back the daily charts easier. Okay, here we go. This was the beginning of that move since the elections won by Trump. We had a correction moving higher, and then we had a drop, and right before Christmas we had another drop. So as you could see, that US indices actually showed some weakness towards the end of the year, and we did start the year strong. As you could see here, we are moving higher starting Friday. It was a strong ending of the week, and that's important. I guess we'll see how the week starts. It could be nobody wants to be short over the weekend. It could be that the market participants found out that it's a bargain price at this moment, and they start buying. As you could see here, Friday's move in Nasdaq recovered the previous few sessions to the upside. The same thing with S&Ps, and Dow Jones is not as strong, but also moved up on Friday. Germany index, a similar story. After making the all-time high, we sold, and we actually closed Friday lower. So it's a pressure on the indices. The UK index Thursday moved to the upside, and Friday sold, did the opposite to the US indices. And as you could see here, something that we mentioned sometimes, you see this green line crossing below. It's something that analysts calling that cross, where the 50-day moving average moves below, and some consider it a selling signal. See, the opposite happened here, something called golden cross, when the 50 moved above or crossed above the 50, and now after a while we actually crossed for the first time. When was this cross here? January 19th. Wow, 1 year exactly, almost. Interesting. So almost 1 year later we crossed to the downside. Is that right? Yeah. Okay, so we definitely will be watching the UK FTSE. Okay, so that's as far as indices. Let's move to individual stocks, and we'll start with Apple, as we mentioned on the slide. Apple did actually great. When a lot of markets sold, Apple made all-time high, and then this past week with the gaps, we actually sold. And Friday as well, maybe that news on the decreasing the prices or lowering the price in China maybe also affected Apple. As you could see, Apple had the flat day when the indices and other stocks moved higher. So the opening price was 243.16 and the closing 243.22. 6 cents actually was up by 6 cents, which is nothing. Okay, so that's Apple. Tesla, as we said, it dropped 6.1%, and nice recovery on Friday on that update for the targets. Let's see what happens. As we know, The big picture is it looks like Trump and Elon Musk built a nice friendship there. Since the election, Tesla's been doing great, making all-time highs, and then we had this drop, and Friday showed a very strong recovery here. So that's as far as Tesla. Nvidia, it looks like it's back in the game. Nvidia had a nice recovery here when the whole market sold. Actually, Thursday and Friday were gapped to the upside. It looks like AI is remaining strong. And as you could see here, we are moving higher on Nvidia. And let's see what's next. Maybe we have some all-time highs or new highs in store. Maybe we'll find resistance around these levels. As you could see here, we made the move down to the lower low against the previous one around these levels, 144, 145. So that's Nvidia. Intel actually caught my eyes here. As you know, Intel's been in a lot of troubles, and probably still is. So you could see here, when the whole market sold on the beginning of the week, of last week, Intel actually slowly stepped up. Nothing to be too proud about, but it looks like if we break this this level here, the previous resistance of 2062, we close at 2052, 10 cents below. If we do break that and continue higher, it could actually mean the reversal of the downtrend and moving higher as we did previously here. So let's see if that happens. If not, we might be going lower and retesting 19 areas. So another one which shows some strength after being sold is, you know, the unfortunate event with the CEO of United Health. The shares really sold heavily, and that actually affected Dow Jones significantly, as United Health is a big holding within the index. So also shows nice strength here. We had the move up here, small correction, and we're actually trying to break, possibly moving higher here. Let's just try to see what could be the possibilities here. So just measure approximate Fibonacci retracement. Let's see what could be the possible scenario here. Redraw it. Okay. So as you could see here, we did stop at 23%. If we do break it, maybe next test is a 38% retracement. So we'll take one day at a time. Of course, we could easily drop and retest the lows again, but it looks like we're holding into this area right here. So United Health also important, and we'll be watching that as well. Banks, back to MT4. Banks also, it's on the watch list. As you could see here, we did a sell-off and a nice continuation to the upside after this sell-off. Let's see how we play at the beginning of the year. JP Morgan here, similar picture here. Bank of America, also after this sell-off, it looks like we're looking for that reversal and continuation to the upside. So that's as far as banks. Also, two markets that we discussed a few times. I want to bring it up. The SQQQs. This is the ETF for reversal of Nasdaq. As you could see here, we did have a double bottom here, and we had a nice move to the upside. And with Friday, Nasdaq moving higher, we sold again. So some traders like to watch this instrument, as it really creates a lot of volatility when Nasdaq is moving. So something to pay attention. This is SQQQs. Again, you can see it here. It's a ProShare Ultra Short QQQs, which is ETF for Nasdaq. Okay, and another one which is reflecting on VIX which also has a lot of volatility. You all remember this move in August when we went from 20s to 60s in pretty much no time. And currently similar idea here. We had a double bottom here, which we are holding. We did have a nice move when the market sold, when volatility increased, and then we came right back to it. So something to pay attention to again. So those are the equity markets, and we're going to move now to commodities. We start with the gainers and the losers that we just mentioned. So we start with cocoa first. Here we go. Cocoa, after a big losing week, the previous week, we actually had a nice recovery, which was almost a full recovery and then retracement. So again, for people not familiar with that, just want to share, it's all fundamental shortage of physical cocoa in West Africa, especially Ivory Coast, caused this huge move to the upside. Then we came and we established a very strong support around 7,000, and then we had a nice move, totally bypassing the previous high, easily going to almost 13,000 here. And now it looks like we going into correction here. So that's on cocoa. You can't really predict anything. I guess it all depends on the main reason, which is fundamental reason of physical commodity. So we'll find out what's next. Crude oil, as we said, moved nicely higher, disregarding the Chinese issues, and we are the 200 moving average here. We'll find out. Again, it's a lot of geopolitical things. The war in the Middle East continues. There's new developments in Syria with the new government and I guess new future. So it's a little bit unclear what's next. Here we go. A lot of enthusiasm, a lot of positivity here from 69 all the way to 74. That's crude oil. Gasoline as well had a strong week. Here we go. Trying to handle this previous support. Then we broke below, trying to get back into that area again. So that's on gasoline. And we did actually closed above that 204 level. Let's see if it has some strength moving higher, maybe retesting or testing the 200 moving average here, or will we also have strong resistance around these levels? Now on the losing side, wheat, as we said, was down 3.25%. Was a strong sell-off here, and we came to the previous support from November 14th. This is a triple attempt to break to the downside. Let's see if that happens, or if we hold it, we might reverse and move higher again. Cotton, we don't speak much about cotton here, but number-wise, it was one of the big losers for the week. You could see here, we're trading in the tight channel here in cotton, and so far we're holding the major support. And this next support is, I guess, they're trying to test that one. So let's see what cotton has. Fundamentally, I have no information about cotton, what's happening here. But as you could see here, we're clearly trading in this tight channel between 66 and 71, it looks like it. Copper, as we said, copper did follow a down move with the Chinese market, and Friday bounced, I guess, with the US equity markets. It moved to the upside. So let's see how this upcoming week will play for cotton. We are below all three moving averages, the 50, 100, and 200. And our previous support here was on mid-November, and they at 399, almost 4. So that's copper. Let's take a look at natural gas and gold really quick. Natural gas had a huge move with the new contract. It squeezed everybody out on the huge volume, and this was on December 30th, towards the end of the year. And then we started the new year with sliding lower. We did close that gap between contracts, and let's see what's next. As you know, there's a big issue in Europe now with Ukraine refusing to renew the contract of transferring gas from Russia to Europe. I don't know how it actually affects the U.S. gas here. I know in Europe the gas prices should probably go up, but here we did have a nice move up. We did close the gap, so let's see what the upcoming week will bring up here. We are above all three moving averages, and we're holding so far. We are holding the upside trend line, as you could see here. So, and let's finish commodities with gold. Gold has been a champion trying to really hold. As we mentioned, the yields went up. Usually gold would sell off on the yields moving higher, but it did really hold the positions around 2,600. We did dive below a few weeks back. We came right back since then. The 2,604 area or level has been super strong support, and so far we are holding it. So that's on gold. Again, let's see what happens the upcoming week. Again, Wednesday we have FOMC minutes and we have NFPs. So definitely the dollar will move, gold will move, and the equity markets will move as well. So that brings us to US dollar in Forex world. Let's take a quick look what dollar is doing. Dollar's been super strong. As you can see here, it goes together with yields. Yields are pushing the dollar higher. So we did have a very strong Thursday to the upside. After breaking through 108 level with a very strong move and sticking to it, we had two very strong sessions here, Wednesday and Thursday, and Friday, a little bit of a sell-off. So US dollar is very strong. And let's just take a quick look at the biggest losers first. There's one big winner, which is dollar Swiss. We had a nice move to the upside in the recent week, and it looks like we did break through the previous major level, as you could see here. Last time we touched this level was in beginning of July of 2024. This week we broke above it. We did try to shake the stops and close higher on Friday. Correction, giving 50% from the previous day. Now on the losing side, we had downside pressure on pound yen, a strong move to the downside here, breaking the 200 moving average here and stopping right on the 50-day moving average. Pound dollar, it looks super weak here. The mirror image of dollar index, it looks like it. And we did break this double bottom here, and it was a strong sell-off on Thursday, a little bit correction on Friday. So that's pound. It looks like it's in the free fall here. Let's see what happens next. And euro dollar, similar story. As you could see, we're stepping down with the lower lows, lower highs. And let's take a quick look at what it does in the weekly chart. As you could see here, we did break through the major support around 105. For a few weeks, we've been trading lower. We're right in the air here, so we could be continuing lower. We could be finding some support at some level, but there's no major supports. Maybe somewhere here that's where we test again. We could be not very objective here by doing it, but it could be that this level could be support around 102.60. It looks like it. It looks like we are holding around this level. So that's on euro, dollar. Now let's take a look at the majors. USD CAD is keep on stepping up. You could see here, which I personally was expecting the CAD to gain some momentum to the upside as crude oil moved higher, and usually Canadian dollar is getting stronger when oil is getting stronger. This time it didn't really happen much. So USD CAD has been super strong. This candle here from December 18th, it's our immediate resistance. it looks like we are trying to achieve that level. Now, we spoke about Australian and New Zealand dollar. This has been super, super weak. As of now, they remain weak. And yen, dollar yen, with the whole strength of a dollar, as you could see here. Let's take a look again. Dollar index just skyrocketing here. Dollar yen is having a hard time breaking this level, as you could see. We're really hugging this level here around 157.50. And as I mentioned a few times, we could see that action from Bank of Japan sooner or later, which possibly could add more strength to the yen. You take the rest of the market against the yen, it's been into the down move recently after holding strong resistance or strong levels of resistance. So that's with yen. Again, we'll find out. As I always say, Bank of Japan is famous of doing things unscheduled and by surprise, so anything could happen. They're also very famous with their interventions when you see spikes with the yen. So that concludes the Forex review, and let's take a quick look at Bitcoin. As you know, we did have a nice move to the upside. The same thing started as it started with equity markets with the winning of the elections. As we know, Trump, it's super positive about crypto, so it was a strong reaction. We did hit, I think, 107,000 Bitcoin, 108 even, and then the key 100,000 became a resistance the moment we broke below. So far, we still haven't managed to break to the upside from that. Ripple has been strong. It looks like it's the strongest of all. As you could see, percentage-wise, it was a big move since the elections. We came from $0.50 to almost $3. And now we're holding this $2 level very strongly. We're not managing to close below. And as you could see here, every time we come to that level, the buyers are coming in. So that's on Ripple. Okay, so that concludes our technical review. Again, it's going to be a busy week. We have NFP numbers, which is the conclusion of the week, and I think the main number of the week from the economic calendar. We'll find out how many jobs were added, what's the unemployment. We have also on Wednesday, 2 days before that, we have the FOMC minutes, when we get more details about the way the central bankers were thinking on the last decision, and I guess we'll find out a little bit more about the future moves. So that's it pretty much. Thank you for attending. I want to wish everyone, again, we're in the new year, right? Last time we spoke was the last year. So I want to wish everyone a happy, healthy, prosperous year, and definitely there's going to be a lot of moves with the new president coming in, a lot of volatility, which we need as traders. And I want to wish everyone all the best and definitely a successful week. And we should be back next week. Don't forget to subscribe and follow us and on social media. Write your comments, click the likes, and have a wonderful, wonderful week. Take care.